What's going on, YouTube? It's Dave's Daily Trades. We're back and we are ready to cover some AMC today. In today's episode, we do have a lot to cover. First, we are, as always, going to start off with that technical analysis, going over our current Wyckoff accumulation schematic, how I think we're going to be playing out for the rest of the week, but most importantly, going over some support and resistance lines and downtrends that we need to be mindful of throughout the rest of the week. We're also going to be giving some updates on the overall economy, the rate hikes that are expected, going over the latest updates for the Chinese real estate development companies. We're also going to be going over the Sibo options calendar. This is some really interesting stuff going on over here. And lastly, as always, we're going to be taking a look at the options flow using unusual whales. Without further ado, let's roll into the intro and hop into the technical analysis. And we're back. All right, folks. So first thing I do want to start off with is this death cross. So a lot of people were very fearful of this, which, of course, it's called a death cross. So I guess you should be fearful of how this sounds. But what I do want to say is this death cross is when the 50-day moving average crosses over that 200-day moving average. This blue line here and the orange line here. But what we all need to keep into consideration while charting is these moving averages are lagging indicators. As we move up on the time frames, i.e. the 15-minute to the 1 hour to the 1 day, these indicators will lag the more you kind of zoom out of those charts. So this crossover, it did already happen, and that is why I believe we did have this negative price action for the last just 2-ish weeks. It was really because of that death cross, showing us that we're going to see some downside. But we did see that in our Wyckoff accumulation schematic, and we were expecting some downside. Now, where we are is actually very good. And just an update, we were down 0.91% today, traded about 37, almost 38 million shares today. So all in all, not a bad day, mostly because of the reversal that we had. But let's start off going over the 5-minute chart. So what happened early in pre-market, we were down, I think we opened like 5% down, and we had some volatility in the morning and really respected this trend area here of $21.50. Now we did kind of fall below this, but quickly came back up, retested this area as support, and confirmed this once here and in pre-market again, or early trading session today. So that was really great to see. But once we did confirm this a second time for the trading day, that's when we decided to push up and move into our next area of 22.50. So all in all, a great day, especially from where we were at this morning. Volume still lacking, but we'll take it, guys. We'll absolutely take it. But I do want to say we did close just about at the high of the day today. But what I really like to see is we actually did respect this trend line here before pushing up for that last 5-minute candle. And as you can see, volume going into close was really good. We were trading higher and volume was trending to the upside. That's always great to see. So let's actually jump over here to the 1 hour chart and just go over a few other things. So really during last week's update, we were talking about this bear flag that was forming on the 1 hour chart. And really all of last week, we respected this range very well. Bouncing up and down from this range, but overall trending down. Now, this is called a bull flag for a reason. It's because when you do break out, it is a very bullish sign and a sign of an overall reversal. So on Friday, we did break out of this, but really just traded pretty choppy for the most part. We respected this area right here of 22.50, but today we fell back down. Now, what happened today? Well, all in all, it was okay. We got that reversal. That's what we wanted. But that gap down in the morning was certainly something I was a bit concerned at first. Finding support at this area somewhere over here at like 21.30 was great. We did get some type of, you could call this a double bottom here before starting our trend up. But really the thing that I was most focused on is really the last couple hours of the trading session, where we did find that low and we really just started to push up. Volume was slightly increasing. I know the last hour of the trading day was a little slow, but guys, that's totally fine to see. Now, a few things I want to look at the indicators down here. One is going to be our RSI. So RSI was really just beat up last week. We were trading at a low at one point of 20 on the RSI scale, completely oversold, and really just floated in that oversold territory for quite some time. Now, we did get that MACD crossover, and it has continued. We are pushing back up to the neutral level, but I would really like to see this come back into the positive territory. What would that look like? Well, of course, RSI right below that bullish range of 50, so we do still have some room to run. MACD, on the other hand, like I said, below that neutral level, and I do want to see this push into that positive territory. Now, areas that I'm looking at going into next week, well, this week, sorry about that, folks. Well, I would love us to see a retest of this $25.30 range. That would be really where I have our next resistance point. As we can see back here, we were fighting this area as resistance. So that's not really a huge area of concern because we only have a few touch points on this area. But looking higher, this area here of $26.88, this is really a great support area, but since we have broken below, has become resistance. So I am curious to see how this area plays out. Alternatively speaking here, we do have this downtrend that we've been talking about for months now, literally months. So we have been unsuccessful of breaking out of that downtrend. So breaking out of this would be absolutely key. I do believe max pain this week is right around that $24 mark. So I wouldn't be surprised if we get a similar, I guess, week as we saw last week, where we do push up and then we kind of trade down until we become lower than the max pain on Friday. So that's what I'm thinking. But all in all, guys, I do believe we have some upside potential, especially since RSI has been beaten like a dead horse. MACD still below that neutral level. But all in all, guys, I do want to see volume pick up here. That is absolutely key. So looking at the Wyckoff accumulation schematic, I'll actually pull this chart up over here and drop this in. And this is what we're talking about here, accumulation schematic number 1. And of course, I will link this in the description below so you all can take a quick read through this. So where I do believe we are in this micro schematic is in phase C here, where you do get that spring action, a test, and then kind of move into your phase D, which is followed by your LPS and then your bullish push up. Now, that's where I have us, phase C. And sorry, guys, I didn't draw the all the different phases, but you guys should be able to get the kind of the point of this all. So in phase B, we did get that ST. Now, why I'm putting this as our spring right here is because this ST in phase B, we dropped pretty massively in pre-market and then initially just within the first like 30 minutes of this trading day, pushed all the way back up into our territory. So I'm almost not counting this bar right here just because of the pre-market push down. Now, similar things happened here, but this was more of a deeper spring and then a reaction. So that's why I do like this area right here, and I'll label it for you all. We'll go spring. Perfect. So that would be our spring phase right there. And then followed last Friday, we get that kind of reaction to the upside. This would act today as our test area. So if we jump back to that schematic, you can see we get that test phase, which is still in the lower trading range, exactly how the schematic looks. But, I mean, guys, the big thing, nothing's going to be perfect 100% to the T. But the fact that we did come down, retest this range, you can almost say we came close to retesting kind of this bull flag that we had forming, retest this and start moving up. So per the schematic, we got that test. Now we want to see that move up back into the trading range. Well, our trading range is just about from $25 to $27. So a push up back into this range here. As we stated before, this was a great support area. I mean, going back as you're selling climax, you're selling test. Over here when we kind of had that sideways trading action, So I do believe this is going to be an area that is going to be difficult to pass through. So getting rejected here, coming down, retesting again before making a final attempt at this area here. That's how I believe the schematic is going to be playing out. Now, the time frame of it all doesn't really matter, but the big thing is keep in mind that max pain is at that $24 mark. So I do believe coming back up, and by the end of the week, probably getting that retest somewhere in this area to close slightly under max pain, because we all know it's manipulated. They're going to force the close below max pain. It is what it is, guys, at this point. Now, I do want to hop into some other kind of macro events, and specifically just let you guys know that the S&P 500, triple Qs, just about all stocks today were beat up in pre-market, very similar to what happened with AMC, and then did get that end-of-day push. So AMC did follow the broader market today for the most part, but onto some really interesting things. Well, as we discussed, the rate hikes. It's not something the market is looking forward to. We know that. We don't like higher rates. So we've been talking about this for months and months and months, probably since June timeframe, when they weren't expecting, and when I say they, it's the Fed, they weren't expecting to increase rates until 2023, and probably even after that, if we're being honest. But now, because of inflation, because of all the kind of events going on in the overall economy, they are kind of being very reactive to this. Before, they were expecting June to be the first rate hike for 2022, which was definitely a push from their previous stance on this all. Just last week, Fed minutes came out. They were expecting 3 interest rate hikes in 2024. But what comes out today? Well, Goldman expects the Fed to raise interest rates 4 times in 2022. So the reason why I am sharing this with you all is because a lot of unexpected things are happening. They were not prepared for what is coming with our economy. The inflation, the issue with all of our jobs going on. I mean, you have a lot of walkouts going on right now. Staffing shortages, and also just all of the worldwide events. So they are being extremely reactive and potentially doing 4 rate hikes in 2022. Well, that is going to hurt the market. It's going to hurt the market, but be very good for AMC, GameStop, and all the other various meme stocks, because it will put immense pressure on those margin accounts. Now, what else do we have going on in the economy? Well, China. China has been absolutely getting beaten. A lot of things going on with their property development and just real estate entirely. So what we have here is an article from Reuters, and what it states is Chinese local government investment vehicles owe, yes, $8 trillion and are big dollar bond issuers. Under stress, Beijing may let some default. Others might try to dump assets in a weak market, which could get very ugly, says this reporter right here. So, I mean, this is not good stuff, guys. And this is absolutely going to have some spillover effects into the U.S. equity markets. And let's be honest, for the global equity markets here. This is a major issue that we've been talking about. And sure, they can kick this can down the road. They can push it. They can push it. They can push it. But at the end of the day, it's a failing economy with lots of over leverage, similar to what we have here in our equity markets. But this is just more with the real estate market entirely. So not good things going on. And what do we got here? Well, the International Monetary Fund is warning faster than expected Federal Reserve rate hikes could rattle the financial markets and trigger capital outflows and currency depreciation aboard. So just going back to our previous article about the 4 rate hikes, well, yes, it is, again, from Reuters, it is going to cause some massive disturbance in our entire economy. Now, the big thing is, they said no rate hikes in 2022. It's not going to come until 2023, 2024. Then we said 1. Now we're up to 3, potentially going to 4. So don't be surprised if we even see more potential rate hikes faster and more aggressive rate hikes very soon. I know they are trying to push this until just about March of 2022, but to be honest with you, I don't know if we're going to be able to get to that date. I know that's the target, but 2022 is going to be a freaking ugly month. And as we know, the markets do not like this stuff. Now, I do know that a lot of people have been talking this 2022 options expiration calendar by Sibo. And essentially what we have, yes, this is 2022. Made sure not to use the 2021 one because I already made that mistake. But nonetheless, on January 21st, we all know this date because of the ridiculous amount of open interest for those January 2022, 21 call options. Now, what happens on the 21st? You have your standard expiration date for equity, equity index, ETF, and ETN options. Equity leaps expire in December, January, and June. So we all know they can roll all of their plays. They can buy time. But at the end of the day, you do have those 3 time frames, which is December, January, and June, where you have the expiration for your equity contracts, your ETFs, your ETNs, and all those various options. Now, coincidentally, that January 21 options chain looks dangerous. So, remember the famous article by JP Morgan when they came on, I believe it was CNBC, and they said expect some market volatility and potentially a short squeeze going into 2022 and in January of 2022. Well, is this them getting ready for it? I mean, this could absolutely get dangerous for them, and this is not guaranteed, folks. This is just something that a lot of people have been looking at, myself included, and it could certainly cause some volatility for the next couple of weeks. So we're definitely going to be keeping an eye on this. We'll definitely be looking at that options chain, and that really brings me to my next point, going over the flow using unusual whales. So, breakdown by expirations. Remember the 21st. What do we got a lot of activity at? And we've been going over this stuff daily, guys. This January 21, 22 expiration, there's been a lot of activity going on with. Now, also, sure, this week, expecting a little push here. What are we looking for strikes? Well, that 23 because $24 is that max pain. We also have some activity around 30 and even at that $50 strike. Are we getting ready for that massive move? I don't know. But this certainly looks interesting. And we can go down, and that was for minimum premiums of $1,000. If we look at the $5,000, we can see the same thing, that 2022, 121 expiration. And where's activity for the minimum premium for $5,000? Well, we have a lot around this area here, 23 and 24. So this is going to be the battle this week. Bears are absolutely going to try to keep us below 23. Bulls, they want us above it. We scroll down even more. Nothing really too crazy here, honestly. Nothing really too crazy. Kind of flat around this max pain point here. A lot of activity around that 23. And then you can see the Bears are really trying to push us down to 18. So that's all that I have for today's video. And just a quick recap on the technical analysis here. What I do believe is we are in a good spot. We did break out of that bull flag, which is always great to see. Volume, still freaking dead, guys. We know where they're pushing the volume to. And most importantly, I think it's going to be a slow grind, a push up over max pain, and then a slow grind for the end of the week to drop us below max pain. So that's what we got, guys. Of course, I'll be updating you guys daily, and we will go from there. Peace out. Make sure you guys tune in for the next one.